Very good morning, traders and friends. I'm Nalnakshi Swami, coming up with another strategy which will help you not to miss the trades. This is called as Volatility Vortex Strategy. Here, I'm using with Keltner channel and Bollinger Bands. This strategy has been configured based on the two indicators. Volatility Vortex. This is a comprehensive trading strategy. That means which includes everything, known as Volatility Vortex, which utilizes Keltner channels and Bollinger Bands to identify high probability trade setups. This strategy focuses on the interplay between these two indicators, how they interact with these two, how they interact between themselves. That is the main thing we are going to see, and I have built the strategy for that, emphasizing key areas such as squeezes, breakouts, and divergence. Three things: squeeze, breakout, and divergence. It will provide you a structured approach to implementing the strategy, including indicator settings. I'm going to tell you about the indicator settings, entry and exit strategies, and unique twists. There will be unique twists also to enhance trading effectiveness. So this strategy is called as Volatility Vortex Strategy combined with Keltner channel and Bollinger Bands. So here, three things. In this picture, in this stock, especially Varun Beverage, you can see the squeeze, and before the squeeze, there is an agreement I've shown over here, agreement between both the indicators, and there is momentum built up. This is divergence here in this area. That I'm going to explain it to you as I explain the strategy here. This one combines Keltner channel and Bollinger Bands. Okay. Here, it mainly focuses on alignment and contradiction between the indicators. If they align together, you will get a very good setup, very good trade. And if they contradict themselves, then it indicates something. Okay? Here, indicator alignment. It gives you trade signals when indicators agree. That means both the indicators, Keltner channel as well as the Bollinger Bands, they are agreeing with each other. They go together. Then you will get a trade signal. Indicator contradiction. When they doesn't agree with each other, Keltner channel and Bollinger Band, they do not agree with each other, they disagree, it cautions, signals caution when indicators disagree. So you will be cautioned for the trade, for the coming up next movement in the market. So here what we are seeing is Keltner channel Bollinger Band squeeze, cross, expansion, cross. That means Keltner channel, sometimes what happens, Bollinger Band squeezes inside the only one lower Bollinger Band or sometimes upper Bollinger Band, it will squeeze inside the Keltner channel and it indicates something momentum is building. That is the expansion cross. So if the lower Bollinger Band is contracting inside, then it indicates the direction towards downward movement. It indicates that is called as, we are seeing for that. Keltner channel and Bollinger Band breakout agreement. So both of them, they will agree with each other. They move together and Bollinger Band expands and even the Keltner channel also move along with the Bollinger Band. Then there will be an agreement between both the Keltner channel and Bollinger Band. And third thing we are seeing for the volatility divergence zones. Some zones will be there where you cannot trade also. There, a scalping opportunity from upper to lower Bollinger Band, you will get a scalping opportunity for your trade. Why we have selected Keltner channel and Bollinger Band is Keltner channel, this channel is constructed based on the average true range. The bands are ATRs constructed around 20 period EMA. Whereas Bollinger Band, it is two bands constructed around 20 period EMA. They are standard deviations. These are stable things. Keltner channel with the ATR average true range is like a road which is running with a proper alignment. Whereas Bollinger Band, what it does is, if the volatility increases in the market, there will be expansion of the Bollinger Bands according to that is standard deviation. So these are normal things. They will have nothing volatility. They will not expand too much or anything. It is like a normal road running. So we have selected both Keltner channel for the constant thing and Bollinger Band for the volatility expansion. Both are volatility indicators, right? So we are seeing for these three things in this strategy. Indicator setting is basis, length and multiplier. Same thing. I have explained it to you. Simple moving average 20, 2.0, Keltner channel 20 and 1.5 ATR. Note down, Bollinger Bands are more reactive to price volatility, while Keltner channel remain more stable around the true range. So we want one person, stable person, and another person, if he is volatile, a person who can stand stable, we need that. So that we will have guidance for our trade. The question is which volatility? See, we are using both the things, Bollinger Band as well as Keltner channel, because it is more stable. And Bollinger Band is more reactive to the price volatility. So we are combining both the indicators for balancing out dynamic as well as consistent market. Here, next step is, it is optional. You can take the second opinion, like RSI confirmation. If you are taking an opinion, RSI above 60 confirms strong upward movement. At that time, you will see Bollinger Bands, expanding bands, signal rising volatility, and potential moves. Keltner channel, price above the Keltner channel shows upward momentum. When the price RSI is 60, Bollinger Band is expanding, and the Keltner channel shows price above the Keltner channel. Understood? Price has to come above the Keltner channel. That means the price is above the average true range, ETR. It is almost similar to super trend, which has been constructed by the ATR principle only. So even Keltner channel, if the price stays above the Keltner channel, then when they both are agreeing, Bollinger Bands and Keltner channel, and the price staying above, and we are taking the consultation of RSI, RSI is telling I am above 60. So it indicates the strong momentum. You can enter into your trade. This is the buy setup. Buy setup, I explained it to you. Again, I'm going to tell you. Bollinger Bands expanding outward. They will expand outward. Suggests increasing volatility. See, you need to observe the things. Observation is very, very important. And when you see the expansion of the Bollinger Band, it indicates volatility is building in the market. Price closes above the upper Keltner channel, but still within the upper Bollinger Band. That means indicates momentum is building. It is not excessively overbought. So you are not entering into a trade which has been exhausted. Your entry will be exactly at the point of where turning is coming into the market. Confirmation we are taking, that is optional. You can apply RSI and take the concern. What harm is there if you take a second opinion? There is no harm. You need to take the second opinion. If you are doing a major decision, it is a major decision, you are going to trade in the market, putting your capital, your own capital you are putting. Then you can take the consultation with the RSI. When RSI shows that I am above 60, provides additional confirmation of strong upward movement. So these are the three things you need to see for the buy setup. Okay. This is an example actually. I'm taking the example of this is Nifty chart, and I have used the indicator. I have given in the community post, I have given the link for this indicator, volatility divergence. So you can go and access that indicator and you can apply on your Pine script and get the indicator. This indicator gives you Keltner channel with the median line. The violet line is the median line, 20 period average, and the yellow things are Keltner channel. And the blue lines are Bollinger Band. Here, what happened in the market? It started coming down and it stayed within the Keltner channel. This is 15-minute chart I'm showing. And it did not go to the Bollinger Band. That indicated that price is not coming to the Bollinger Band. It is stable. It indicates the stability of the price action. Then it was an history. You knew that after 11 a.m. there was a huge movement in the Nifty. Okay. Next is sell setup. For the short entry, what you are going to see? You are going to see Bollinger Bands expanding outward. Here in the opposite side, buy setup, you are seeing upward expanding to the upside, whereas Bollinger Bands start expanding outward, similar to the buy setup. This indicates increasing volatility. Price closes below the lower Keltner channel. Price is closing below the lower Keltner channel, but still inside the lower Bollinger Band. Shows building downward momentum without being excessively oversold. That means you can enter into the trade where it has not been exhausted. You have got room for your trade. You are not entering into the exhaustion. If you enter into the exhaustion, you are not going to make profit. You will be very late. So by this way, you are getting a confirmation with the early entry. You are entering into the trade. So you are safe. Your risk to reward will be good. Your stop loss will be minimal. So again, you can take the consultation of RSI. You will see RSI will be below 40, provides additional confirmation of strong downward momentum. When you see this, even if it doesn't go below 40, and if the RSI starts crossing below its moving average, that is a signal. And above, you are seeing the indication above on the Bollinger Band and Keltner channel. You get an entry, even early entry also. Here you can see, I think it is the chart of Divi slab or something. I don't remember. I just took the picture here. It started coming down. You can see it crossed below the Bollinger Band. Bollinger Band. It was a sell-off from here. You can see from the top here. It started coming down, still within the Keltner channel. It has not closed below. Closed below, but if you would have seen RSI already showing, you can see over here, the price is below the median line, violet line, and you can see the expansion of the Bollinger Band, indicating volatility is building down. You can see it had come down. You can see you could have entered here anywhere between in here. It was a very good trade. That is the short term. Volatility squeeze signal. That is called as no trade zone to watch. Both Bollinger Bands and Keltner channels contract and come very close or overlap. This is the preparation period for the volatility build-up. Price is moving within the both bands like in a tunnel. In Nifty, same thing happened. Till 11 a.m., price was rotating inside the Bollinger Band and Keltner channel. It was moving up and coming down, moving up and coming down without any direction. It rotated for 2 hours. After 11 a.m. only, the market was a exponential up move was seen in the Nifty. This forms a volatility vortex. Vortex is nothing but like a whirlpool. That is the meaning of that. Whirlpool means like in Hindi or in Kannada, Chakravyu. That is like it rotates without any direction. It cannot stay like that. At one point of time, it has to come out. See, here, this is the graphical representation of this breakout direction. Upper bands breakout, you will get a long entry. If it is a lower band breakout, you will get a short entry. You can determine your trade entry. This is the graphical representation for the entry. For the exit strategy, say once you enter, you should always plan your exit. Aim for the next average true range value from your entry candle, or otherwise what you can do is, you can take my tool, which have been tweaked with the fib tool, that is 3 circle cycle. I have shown it to you. Again, I am going to show it in this video. You can do that. Stop loss. Place your initial stop loss order inside the mid-Keltner channel. Trailing stop loss, use the opposite outer Keltner band as a trailing stop loss to lock in profits as the trade moves in your favor. See, Keltner channel is an 8-year band. That is a supporting band. They will act as the price moves, ATR band will also move. Meaning that average true range is moving along with the price. That is, road is running. Here in this volatility, this one, there will be an unique twist. That is called as volatility divergence trap. Sometimes mismatches between Bollinger Band, Keltner channel can signal traps or false breakouts. It is nothing like the price moving to the upper Bollinger Band to downward Bollinger Band. Probably you might have learned about this strategy. It is like that. And it can, between Bollinger Band and Keltner channel, can signal traps or false breakouts. That is nothing but range trade. Price touches the Bollinger Band but does not touch Keltner channel. That is a weak move. Fade it means you consider for scalping, go short. Consider trading in the opposite direction of the Bollinger Band. Suppose if it is an upper Bollinger Band, trade in the opposite direction towards the downside. If it is a downward Bollinger Band, trade towards the upside. Price touches the Keltner channel. I showed you in the Nifty, price touched the Keltner channel, but did not touch the Bollinger Band in the first 15-minute candle. It indicated the controlled move. There you are not going to take any sell trade or anything. Look for, scalping opportunity will be available for the in direction of the touch of the Keltner channel. You can do that. Opposite side, you can take the trade and you can trade it. How you are going to interpret price movements relative to Bollinger Bands and Keltner chart. This is the graphical representation of the divergence between they are not agreeing with each other. Weak move, price touches the Bollinger Band, not the Keltner channel. Consider fading the direction of the Bollinger Band. Okay. Price touches Keltner channel, not Bollinger Band. Controlled move. Look for the scalp opportunities. One, you will get a fading opportunity. another you will get a scalping opportunity. This strategy ideal for 15 minutes to 1 hour chart. You have to take it for instruments. What are the instruments you can use for highly liquid instruments like Nifty, Bank Nifty, crude oil? I've used the SPX is the SPY of US market. Even for that is also an indices. Even for the stocks also you can utilize this. A very liquid stocks you can utilize and you can do that. Market conditions works well in transitions from ranging to trending market. That's what happened in Nifty. It was a transition from a ranging market for 2 hours. It ranged. That was a range breakout in Nifty. So it helps you for that. So what are the conclusion? This strategy uses interplay of Keltner channel and Bollinger Band. We are going to get a high probability trades. What you need to look for is squeeze, whether it is squeezing, breakouts, and volatility divergence. You can implement a clear entry and exit strategy. Okay. So you need to select ideal instruments and ideal time frame, 15 minutes to 1 hour. So remember that it is a disclaimer. Trading involves risk. Always practice proper risk management. That is my advice. Let me take you to the chart. Here, I am on the Nifty chart. I have applied let me hide the hour indicator, 5 minutes indicator, that is circle indicator. And I have applied only this volatility divergence trap zones. Volatility divergence, I need to know whether they are not, I want to see for the divergences. That means they are not agreeing, they are not agreeing. Disagreement we will see. In the disagreement, agreement will come in the market. When they start disagreeing, the disagreement will lead to agreement in the market. See, here in this, prior to, this was a chart, previous day chart, it did not touch. Here you can see Bollinger Band. It is touching the Bollinger Band and could not go there. This indicator will indicate you the green color plus signs. You can tweak it to plus sign or according to you, or dots like that you can do. And it is indicating it is coming to the lower Bollinger Band, but it is not agreeing. Keltner channel, price is not coming below the Bollinger Band and it is trying to stay within the Keltner channel. That means price is respecting the average true range. And you can see there is a squeeze over here, volatility squeeze. And if I zoom it out, at one point of time, Bollinger Band squeezed inside the Keltner channel. Not in this time frame. You can see here in the 15 minutes time frame, you can clearly see the Bollinger Band squeezed inside the Keltner channel, and you can see the expansion of the Bollinger Band outside. That was yesterday. Yesterday, around 1:15, you might have seen aggressive move in the market. The price moved from 23,299 to 23,431 within 3 15-minute candle. And the morning on Thursday, it was a huge drop-down candle, but did not touch the Bollinger Band. Okay, you are seeing a divergence. When you see the divergence, automatically this indicator will plot you plus sign, so that here there was a contraction and expansion started over here. In the Bollinger Band started expanding. There was an agreement between both the Keltner channel and the Bollinger Band. Price started closing above the Keltner channel, still within the Bollinger Band, upper Bollinger Band. Price has not come out. So you are getting an entry, and if you apply because I'm restricted to only 2 indicators, that's why I'm not applying that. RSI clearly showed above 60. That confirmed everything, momentum building. Even if you would have entered over here, keeping this as the stop loss, middle Bollinger Band, median line, 20 period moving average, you could have run this profit. See, here only there was some sort of price coming over here. And I will show this is an example for the Bollinger Band and Keltner channel squeeze. You can clearly see the Bollinger Band has squeezed inside the Keltner channel. Can you see over here around this area? Let me put the rectangle over here. Where is the tool? I'm not able to see the tool. Come on. Here. You can see the contraction. The Bollinger Band has contracted. It has dipped within the Keltner channel. You can see the here, when it started moving up around to 130 or something, Bollinger Band started expanding. Here, you can see the price moved so swiftly over here. We are looking for the squeeze. Squeeze will provide you a momentum build-up, pent-up energy. So when it started moving, expanding, Bollinger Band started expanding, you got the momentum trade, buy setup you got. This was the buy setup. Let me see for the sell setup. I think it is Divi's laboratory, I believe. Here you can see in the Divi's laboratory, this was 16th. Already price was coming down. It was around the market opening. It has come down. The price touching the upper Bollinger Band and lower Bollinger Band. And then here in the first 15-minute candle, this is first 15-minute candle, second 15-minute candle, the price started moving inside. This is price action. Price action, you can see here, the price is below the 20 period moving average, and the Keltner channel is running within the Bollinger Band, and Bollinger Band expansion you can see for the volatility move up move. It's not very evident, but you can make out by careful observation. So Bollinger Band you can see moving inside the Keltner channel, and it was a swift down move in the Divi's laboratory. Let us take another example. Let us check any other stock. Oh, Divi's Lab, 114 points. Let us check whether Hero Motorcar, sorry, what happened? Let us check for the Hero Motorcar. You can see Hero Motorcar in this first 15 minutes, a huge gap. Price started moving inside. You are seeing it is marking for the divergence over here. Price touched the Bollinger Band and also Keltner channel. When it started moving inside, there was a huge movement up to the top. Same presentation was seen in HCL technology. Here you can see price came outside the Bollinger Band. That was uncontrollable. Next, price started moving inside the Bollinger Band. And it is showing the divergence. And then price started moving here. And this was a momentum in the market. These are the Keltner channel. You can see Keltner channel. Here when price started, there was a squeeze over here prior to on 16th and 15th, there was a huge squeeze. You can see there Bollinger Band squeezing inside the Keltner channel. That means it is squeezing inside the average true range. Price is squeezing. That is an indication. You can see expansion of the Bollinger Band indicating momentum. Short setup, if you apply RSI, it will indicate. Even with our indicator, this is the indicator we can utilize. This is based on the circle strategy. You can see this is the 0.66. This is red line is point. Let me hide the first. Let it be there. This is 0.23626. Sorry. And then this green line is the median line and it is the negative 0.26 and it is negative 0.66. That means our circle is sitting over here. Okay. You can see in this circle, the Bollinger Bands. We are applying this Bollinger Band and Keltner channel. Price squeezing inside, indicating there is a momentum built up. Instead of going upward, actually they trapped, price when started falling below this circle boundary 0.66%. Then it took support around the another circle down. The previous day median line is here. Here it came near that area 0.26. You can see clearly. They will act as guidance for you people. I'm not able to apply that. I don't know why it is not selecting. Maybe color, color, that is a black color. That's why we are not able to see here. You can see even these levels our levels will help you. If I go back to the Nifty, even you will not short the market because the price was within this area 0.66, 0.6. This is the circle. Though it fell down, it is within the 0.26. It is taking the support. That means previous day's circle is here. Our circle is here. The price is dipping down. You can see over here. Let me take the brush and draw it for you. You must understand, you must try to see the things. Yes, this is the brush. See, price has come down and then it started rotating. It rotated and then it moved up. So there is an expansion over here. If you come to this level, here, today's trade, these are the circle levels, 0.26 and this is 0.26 and the median line. Even though it dipped down below the median line, 180 degree for the present day, when it started moving above that, see the confirmation above the 180 degree, above the Keltner channel and above the Bollinger Band. So a confluence of my indicator, previous indicator, circle strategy indicator with the Bollinger Band and Keltner channel, this is like another confirmation. You can utilize this for your trade. So this is the strategy you can apply for your trade. When you get confused, you can utilize this. These are the Keltner channel and Bollinger Band, which will help you to trade better. Thank you very much, friends. Nalnakshi Swami signing off.